This is Richard Flax at Moneyfarm, talking about some of the things that we've been thinking about over the past few days. This week we wanted to talk about rebalancing, some of the changes that we've made to our UK portfolios over the past few days. There are a couple of themes here to draw out. The first is that in general we've been adding to some of our equity exposure, particularly in some of our higher risk portfolios. And we've been doing that in the main through so-called value stocks, stocks that perhaps are a little bit cheaper on some core valuation metrics than some of their peers. The thinking behind this is really that in 2021, we expect to see a meaningful economic recovery. We think that the combination of supportive policies, of significant improvements in terms of vaccines, and the distribution of those vaccines will allow increasing normality to return across a range of particularly developed markets. The result of that, we think, could be a significant acceleration in economic growth, some of the pent-up demand, some of the purchases that people have delayed in 2020 could come out in 2021. And that could benefit some of the companies and businesses that perhaps have suffered a little bit more this year. Some of the Nontech stocks that perhaps have seen demand hit a little bit harder than some of the large names that have really benefited from the crisis of 2020. So that combination leads us to a relatively optimistic outlook for 2021 from a macroeconomic perspective. We've generally funded those purchases through the sale of government bonds, and it's an acknowledgement of one of the challenges that we all face, which is that with government bond yields so low, your ability to get a return from them is really quite constrained. That's not to say that they still don't have a place in a portfolio, particularly from a risk management perspective. But given the very low yields, the likelihood that you're going to earn a decent return from them over any long time horizon is really quite low. So it's an optimistic message. It's a message of recovery. That's our expectation for 2021. But we'll be keeping a close eye, obviously, on the macro data and on the corporate data to see if all of that really comes to fruition. Thank you very much for joining us, and I look forward to speaking to you again soon.